From the floor of the CME Group, this is Danny Riley on this Tuesday, March 30th. And you know what, we're into holiday mode right now, and you can see it all over the trading floor. From the grain room into the interest rates into the equities here, people are just kind of taking it easy, and I don't think that we don't think that there's going to be a lot of risk taking going into the end of the quarter or even into the beginning of the next quarter. Right now we've got about 6,000 big S&Ps traded. Now one thing to note, yesterday the big S&P did 20,000 big S&Ps, but on the other side of that they had a total of like 1.4 million minis traded, but about 200 of that came in from Globex, so that's a very low number for the mini contracts. You know, as we go into the end of the day, the markets are somewhat firm, but really it feels like people are taking a step back. And what we're going to do here today, we're going to let Tim come in from top notch, not top step, top notch, and give us technical views. You know, we're into the holiday mode, and we suspect that all the way up into Friday we're going to remain that way, and obviously Friday's closed with the exception of one thing. The currency and the bond market here are going to be open till 10 o'clock. For those poor people that they're not going to be able to go out on Thursday night, they're going to have to be here on Friday morning. The rest of us will be out having some fun somewhere. But I'll let Tim come in with the rest of this.
All right, top-notch trading, back from vacation. I've been gone for about a week and a half. So top-notch was looking for an upside objective while he was gone for 1180.40 to 1182.10. Last week's high is 76.20. Now top-notch trading saw a retracement down to last week's low of 47.80, which was key. So top-notch right now is still looking for a test of that 80.40 to 82.10, and then we should see a fairly significant retracement. However, on a fib level, this market is still going and seeking the 1234 to 1236 area if Mr. Fibonacci has his way. I came back from vacation. There's just two little things I saw why I expect this thing to extend higher, and it's the open interest. Friday, there was 2,000 contracts going into Monday. Yesterday, coming into this morning, they added another 3,000, and that's in the big contract. The mini, of course, subsequently is on a roll too, but the big contract is the key. It also saw that in the NASDAQ from 500 to over 1,100 yesterday. So those are key proponents of why this market is still on its way higher, and now I want to see the SPOO test 1180.40 to 1182.10, and we'll take it from there. See you tomorrow.
And also one last thing. One of the viewers asked the desk, you know, is the market really open on Friday, on Good Friday, during the unemployment figure? Yes, it is. And this occurred several years ago also, and in particular this desk was caught in something on a prior day before the market closed on Good Friday, where we underbought 250 S&Ps, big S&Ps, for a client, and the market opened up 850 lower. So we do remember this particular day. It has a tendency to be volatile also. But yeah, the markets will be open, but what will happen is the currency markets of the CME Group will be open, the bond pit and some of the interest rates will be open, but the rest of the floor will be closed. Everything else will be traded electronically and will reopen on Sunday night into its regular session for Monday's trade. Now, you know, we don't have a lot of suggestions into this. You know, we're going into the end of the quarter, then we're going into the new quarter. The new quarter starts out statistically very good. Friday's kind of a flip of the coin, and then Monday's not a very good day. So you know what? You got to play this kind of one day at a time. We'll be back with the next report tomorrow.